Hello and welcome. In this tutorial, I'm going to show you how to buy and sell options on Robinhood. As you can see, I'm in the setting page, and right here you can find whether or not you have access to trade options on Robinhood. Go to right here, you see green, the account settings, go to option trading. Right here you should see whether or not you have access to option trading. In this case, as you can see here, it says advanced tier. That stands for level 3 trading options. Robinhood offers level 2 and level 3, and the only difference between them is the ability to buy and sell spreads, at least in Robinhood. And if you don't have option trading yet, it should show you amount of people that are currently in line, and it should show you how to gain access to option trading. If you can't find it here, you can just go to their website and sign up with your email. Basically, let me go back to the main menu here. And as you can see, the option that you purchased are right below cryptocurrencies and right above your stocks that you own. And if you want to buy option, you will click on trade, like you always do, to buy and sell the individual stocks. Right here, you have their selection, which is the options. And it will take you to this page, the Discover page. I believe the Discover page is the popular traded options in Robinhood. That's what I think, but I usually ignore this page because it's pretty irrelevant. As you can see here, if you click on the top right here, settings, you can either buy a call, buy the put, sell the call, or sell the put. It really depends on your assumption on the stock, whether or not you think you are bullish or bearish on this individual stock. So if you want to buy a call here, you simply click on buy call and click on the strike price that you are willing to buy. So if you are new, a stock price is the price that you think, along with the premium that you pay for, which is right here, that you think the stock gonna go up to that price. So right now AMD, it's about $10.63. So if you buy about 100 shares, it will cost you roughly $1,063. So that's what's going to happen if you buy 100 shares. And the beauty of buying an option instead of buying the 100 shares of stocks is you pay much less for 100 shares. So in this case, if you click on $11 strike price and you pay right here the limit price, that stands for the premium that you are going to pay. So as you can see here, each contract is multiplied by 100 shares. That means each contract's call option here, it's worth 100 shares. So if you click on that, click 1 shares, it will cost you $15. And right here, it'll give you the basic description of what that means to you. So basically, if you're buying $15 for the right to buy 100 shares of AMD for $11 per share by March 29th. If AMD shares aren't $11 or higher on March 29th, this option will expire worthless. Basically, it means that the AMD needs to go above $11 and right here, $11.15 in order for this option to count as anything, basically to get your money back. If it does goes above $11, which is strike price you see here, and the 15 cents, which is premium, if it does go above $11.15, and every time you go up by, I believe, 15 cents, you would double your money and so on and so forth. So you get more and more money the higher the AMD goes. So that's what it means. So if you click on the chart here, it'll basically give you the basic information. The bid and ask. The bid is the amount of people willing to buy at a certain price, and the ask is the amount of people who are willing to sell at a certain price. As you can see, it will tell you the last sell, the price that you mark, high, low, volume, and open interest. The middle section here is the Greeks of option. It gives you details about the technical details about AMD options. So you can learn those online. Just go to Investopia or just type in AMD Greeks, or just search on YouTube for those video. I'm sure that there's a lot out there who can explain to you much better than I can with these Greeks. And on the bottom here, you will see the break-even price. Right here it's 11.14 and the chance to profit. So if you go back to the previous page, it should have been 11.15 because I am buying at a $15 premium. So the break-even price here should not be 11.14. It should be 11.15. But just 1 cent. So if you go back, and I'm going to show you how you can buy a put option here. So that was the call. If you want to buy a put, you simply do the same thing. You want to click on one and just click on I don't have enough money here, but right here, and then the chart. Basically, when you buy a call option, you want the underlying stock to go up, and when you're buying a put option, you want the underlying of the stock to go down. So call, it's just like regular buying a stock, and puts, it's like you are buying you are shorting a stocks. Also, you want to keep in mind that when you're buying an option gives you the right but not the obligation of the underlying asset, which means that you have the rights for AMD, but it has an expiration date. So it's like a contract to own those. You are having a contract to own those 100 shares, and eventually you will have to give it back. So right here, that's what the expiration date is for. So if you buy March 29 option here, as you can see, it's relatively cheap, and the reason is right now we're, I believe, March 25, 26, I don't remember the date, but because it expires in 5 days, it's going to cost much less. Let me go to the call. It's going to cost you like $15 if you think it's going to go up, if you think that AMD is going to go above 11.15 in 5 days, which is very unlikely. That's why you don't want to buy the short-term option. Usually if you are long in the stock, or you are if you are investing, not speculating, you will buy a long-term option. As you can see here, if you go to January 18, 2019, it will cost way more. It will cost $1.56. And remember that $1.56 is the premium that you are paying for. You have to multiply that by 100 because it's representation of 100 shares. So if you click on that, you see that you need to pay $156 for 100 shares of AMD. And even it costs more than what you pay for March 29, it does give you a longer period to hold a stock and hoping that it will go above that price. And also you can sell your options before the expiration date, so you're not locked into this date, which is January 18, 2019. So if for some reason, not for some reason, if AMD price goes up to $14 and it is, let's say July of 2018, which is about roughly 5 months away or 4 months away from today, then you can sell it, and take the profit of $14, and that probably will double your money here. It will definitely double your money. So instead of 156, you will get about roughly $312. I guess that's how much here. So that's the beauty of options. You can literally double your money. If you buy the stocks of AMD, you need to at least $12 to double your money. Well, not $12, but $10, because the price right here is $10.63. If you want to double your money, the stock price has to be $20.63. And if you buy an option, you only need $2, $4 in this case, for the underlying asset of AMD to go to $14. Then you will double your money when you buy a call option. So that's the basic of call option. I'm just gonna scroll around here, let you guys see the difference between the price and the date. As you can see here, the $12 is worth $1.56 for each shares, which like I explained before, each contract is 100 shares, so you gotta multiply that by 100. So if you go to January 17, 2020, it'll be $249 at a strike price of $12. And if you click on 1, you'll see that you are paying $249 for 100 shares. Again, if you buy 100 shares of AMD, that's $1,063, which is about roughly 5 times the amount of what you pay here for options. So buying options, and if you have a long time bonus assumptions, then you should just buy an option, and it's easier to double and triple your money than just buying the individual stocks. Again, because option has an expiration date, it is a bit risky than the stock itself, because you can literally hold on to stock for the rest of your life if you believe in the stock that much. But option, the expiration date, once the expiration date hits, if the money is below $14.49 here, as you can see the break even, if the stock price is below that by January 17, 2020, then you will lose the whole $200. But again, you can sell your options way before that. And again, if the price falls to $6, you'll be able to sell it for less of the value. But if the stock is $20, you'll be able to sell it for more of the money if you buy a call option. Let me just show you the put option here. It's the opposite concept of what I just told you. So when you buy a call, you want the underlying stock to go up. So when you buy a put, you want the underlying stock to go down. So if you buy a 1063 and you buy a $10 put, basically the break-even price here it's $7.85. So why is that? The reason is because when you buy a put option, you are subtracting the premium from the strike price. The $10 here, it's a strike price, and the $2.15 here, it's the